Welcome back to Golden Rule Radio. We're starting this week's show posting the next round of conferences we're going to have. So look at the dates, look at the locations, see if you can make it to one of them.
You know, specifically, we're going to hit Kansas City, Minneapolis, Philadelphia, Charlotte, Austin, Orlando. Just to start, there may be a seventh one added, so hopefully one of those is close to you.
So if you want more details, you'd like to come out and join us for an evening, go to McAlvanyICA.com/briefing. We'll put the link down in the show notes. You can sign up to get more details.
Share that with your friends and people that you know in that area, because this is something that you don't want to miss with Don and David. The two of them really enhance each other's message. So make it if you can.
Love to meet you personally. And let's move right into gold, technically, fundamentally. Miles, run.
Well, gold so far is doing exactly what we thought it would after that push up. You know, Robert and I talked about some potential support levels here. We could still see that 1295 number, although we seem to be holding around 1310 right now, which of course is aggressively bullish for gold. 1295 is completely reasonable. You've got some 618 fibs down at 1263 and all the way down at just above 1200 at 1212 would still be an incredibly bullish push for gold. So all of these are opportunities to be adding to your positions for those of you that are looking for possibly that last dip down into the 1200s before we see 14, 15, 16, 2000, whatever's next on the horizon.
We have two other tasks that we're going to put you listeners out there. McAlvany Weekly Commentary the last 2 weeks, Bill King last week, and then Trader Roy Friedman this week. Go listen to those shows.
Yeah, especially the last 7 to 10 minutes of this week's, the one that came out Wednesday, the 19th of September. Go listen to them. These are two guys that are not perma bulls. They are guys that have a very macro viewpoint, and they're both coming out saying now is the time to be adding to ounces. And we're seeing an accumulation in ounces, both from a commercial and an institutional standpoint. And that's a turn. That's something that's a new dynamic that is probably, to your point, Miles, the reason that we're seeing the bullishness in the metals.
The one thing that I take away from Bill King's interview is that there's accumulation going on where people, wealthier people, are not trying to push the price and trade the price and sell at the price and not really trading it. They're accumulating it. And that's what's going on there. The other point that I take away from Friedman's interview is that demand is actually soft. Demand for gold in America is weak. People are, I think, very complacent in America right now. And that's the time you want to be accumulating. You don't want to be buying when everybody else is trying to buy, because we've had money sitting on deposit when everybody else is trying to buy, when demand is high in America. We've had money sitting here waiting to buy product because product goes off the shelf. You can't buy it. So now that demand is low, you want to be accumulating while demand is low because you have all these different items to pick from. You can take your pick about what you want to own.
At low premiums.
Correct.
You know, a lot of the metals companies in our industry didn't even exist the last time this happened.
That's right.
But the three of us all remember back during the last gold rush, 2007, 8, 9, 10, when we had the stock market falling apart, oil prices at 150 a barrel. The housing market had just crashed a few years prior, and we were running waiting lists.
Yeah.
There wasn't product available. The mint cannot produce what the demand is, and that's why you saw gold run up to almost $2,000 an ounce and silver almost scraped 50.
I remember silver American Eagle premiums over 40% over spot. I wouldn't sell them because that was too big of a move for our clients to try to overcome. So if you want to jump in when everybody else is jumping in, expect to pay higher premiums and expect, obviously, for there to be a wait on delivery.
You know, you mentioned real estate, Miles, and what's the key word for real estate? Location, location, location. In our industry, it is relationship, relationship, relationship. That is key in making decisions on what to own at certain times, what not to own. And like Tori said, you know, he wasn't going to sell the silver American Eagle at a 40% premium. There were other options, and not having a relationship with someone who knows what they're doing, who's been in the business for a long time, you're not going to get that advice. You're going to be buying whatever the next retailer wants to sell you.
Yeah, and you're going to end up in a dead-end product. And so for me, yes, relationship, but also strategy, strategy, strategy.
Absolutely. The play between strategy and relationship is very key, because I think As you develop a relationship, you're going to understand the strategy. As you implement the strategy, you're going to be strengthening your relationship. And they're just going to bounce back and forth between strength in relationship, strength in the strategy, and working together with people who've done this for a long time is key.
And just like the symbiotic relationship between strategy and relationship, there's also a symbiotic relationship between gold and silver that builds into that symbiotic relationship.
Good little transition.
Trying to get us back on point here. Silver is holding above those top trend lines we mentioned last week. Again, we're still waiting for that real legitimate higher high exceeding the highs that we put in back in like March, April of this year. But we are above that trend line. It's still looking very bullish on the silver side. Yeah. Speaking of strategy, silver remains an excellent opportunity in the metals market to allow you to get into gold at a much more favorable ratio at some point in the next couple years.
Yeah, that ratio has actually moved up just a tick to 76-1. The platinum to palladium ratio is back to 1.03, so palladium's had a little bit of a mini rally here. Let's keep in mind that in 2017, the Dow's up 13%, gold's up 13.9%, pretty equal, but just remember, one is at an all-time high and one has serious upside potential. So let's move on. What's going on US dollar-wise?
The Fed news will be today. We're recording this on Wednesday, so you're going to hear this first on Thursday. So the Fed news will be out there. But I couldn't help but imagine seeing Janet Yellen with a perm. I don't know why, but you know, her hair is so straight and she's so well put together and she doesn't say very much of anything so as to not rock the boat. But let's change this up. What if she actually came out next Fed meeting with a perm?
Doesn't she come out every Fed meeting with a perm?
No, that's only when she's testifying in front of Congress. It looks like it, but she is the, as Robert likes to call her, the perma proper.
That's right. I'm getting to the point of coining this term called perma-prop because it seems like that's what's gone on with the markets. They're perma-propping the market, definitely the bond market with quantitative easing, with not just the Fed, but the ECB, other central banks have kind of latched onto that idea. And it just seems like there's a perma-prop right under the market. So why not, Janet Yellen, come out with a perm?
Well, the dollar's ticked down a little bit today, 91.72. The Dow's at a new high. You guys talked about that being in a rally. Are those barometers as to what's going to be released by the Fed in these minutes? Are we seeing that directional movement as something that's a precursor to the announcement, or are we going to see both of those flip-flop and gold come back down? And I personally think we're at 1310. Gold's either going to come down and test that support per your technicals, Miles, or we're going to see us start to really move towards that 1375 as a result of this announcement.
I don't know if I'm the right guy to ask. Every time I think the dollar is going to go up, it pushes down even further and vice versa. I said a week ago that I thought this, at least from a technical standpoint, we came into a level. We've got divergence. We've got an excellent looking potential correction line above us. There's no reason we shouldn't see the dollar push up a couple points, and it keeps pushing down. So maybe there is no technical reality that has to do with the dollar right now. Maybe it really just has become impossible to determine. It's no longer a barometer of economic movement. It's just a tool used by the Fed to affect other parts of our economy.
So how do you measure the dollar if you don't have other fiat currencies?
It's all funny money. It's a monopoly game. So, but you're right, Robert. The dollar is measured against other currencies in the world. So keep that in mind too. It's not just an Amero-centric or dollar-centric viewpoint that we can focus on. So I don't want to beat it to death, but you know, geopolitically, North Korea again. Here we go, shooting over Japan's head again. Trump's UN speech yesterday was very, very strong. I don't think that, honestly, that's moved the markets any way, shape, or form. You know, I think more is yet to play out. It will, right? I mean, geopolitically, if these strains continue, what do you guys expect?
Well, how something like that affects the market, I think, is determined by who's in that market. So I don't know. You know, I don't know if something like the North Korea event does have massive negative impact on the average investor, because I don't believe that the Dow and the U.S. stock market is made up by a conglomerate of average American investors.
The point that Trump made in his speech to the UN was that we may have to wipe North Korea off the map. And I think that that is a key point in what the market is actually assuming relative to North Korea. I don't think that the market's going to react big time. It obviously hasn't very much about North Korean nuclear threat, because I think people realize that if we do anything militarily, it has to be wiping them off the face of the map. We can't come in and throw a missile over the border and bomb one of their places. If we do that, Seoul, South Korea is done. And we can't afford to do that. Can't afford to do it politically, culturally. I mean, we can't afford to do that. So I think the market knows that if we're going to do anything militarily, it's going to be to obliterate North Korea.
Well, and it's going to be instigated. In order to justify that, it's going to be them shooting first. We could never justify that proactively. It has to be reactively. So we'll see how it plays out. If that happens, circling back, gold's going to skyrocket.
Absolutely. So again, what are your tasks to do this week, listener? 1, go to the link where we have our conference dates, locations posted. Number 2, listen to the Bill King interview. And number 3, listen to the Roy Friedman interview, both on the McAlvany Weekly Commentary.
So we thank you again, ladies and gentlemen, for stopping by this week to Golden Rule Radio. If you like what you heard, hit that thumbs up. Click the subscribe button to make sure you check back each week. You can follow us on Twitter at ICA Gold. And if you have any questions, as always, give us a buzz at 1-800-525-9556.
Thanks and have a great week.